Someone who are happy with small profits, but you don't want to take a bigger risk, credit spreads is the best strategy for you, where 80 to 85% of the time we can make money, but it will be lower profits. Right? I hope everyone is clear, right? When to do debit spreads, when to do credit spreads, what is the best time to do those things based on the market situation, right? You see in the morning, right, 8 to 8:30, you observe like what is happening with ES, NQ, VIX, and then based on that, you can take a decision whether you want to do debit spreads, whether you want to do credit spreads, or if you are high risk taker, you are aggressive, you want more profits, then calls and puts. But always remember, whenever you are taking a risk, profits will be more and also losses also will be more. Okay? Your high reward comes with high risk. It is up to you to decide whether you are okay, you are ready to take that risk or not. Most of the times we won't be ready to take the risk, but we want bigger profits. And when we take a loss, we'll either blame the market, we'll blame the analysts, or we'll blame saying like, okay, these people are faking something, or these people are doing that. So understanding the concepts, understanding about our risk profile will make things better, and definitely it will help us in the long run. So you can be more on the green side, right? Always, right? Always there will be risk in any investment, but the risk gets reduced based on the knowledge and based on the decisions we take, right? One more concept I wanted to explain before, right? We get into earnings and also about the 5K challenge, right? This is about covered calls, right? What do you mean by covered calls, right? Just think about a simple example of you bought a house in Austin. You thought real estate market is very good. You bought a house in Austin so that you want to sell at a good profit, but suddenly market went down. So what do you do generally in that case? Right now you are not able to make a lot of profits by selling the house. So you can type your answer, right? In that case, what you do? You bought a house, planning to sell it and make good profits in a short time, but the market went down, the low interest rates went up, so you are not able to get a good deal. So generally what we do in that scenario, right? We'll hold, or we'll basically rent the home, right? You will rent the home so that you are collecting some residual income instead of just holding it without selling. You can rent the property so that you make monthly some income. It is covered calls is the same concept, right? You bought some stocks, you bought some let us say AMD or Nvidia, or you bought some, right, Apple or something. You thought stock will move up, but because of current market conditions, it is choppy, it is be on the sidelines. So the stock is not moving up. So instead of you holding the stock just like that, what you can do is you can keep on selling the calls at a higher strike price, right? Let's take one more example, right? Let us look into Thinkorswim, so it will make it easy, right? Let us say you have a lot of stocks in your IRA account, 401k account, or your retirement account, right? Even in IRA, all those things also you can do covered calls. You bought some Apple stocks, but it is not moving. You thought it will go to 200 or something, but it is not moving more much. What you can do, again, you can be on the seller. You already have the stocks in your account. You are holding the stocks. Instead of just keeping them, you can start selling, right? For example, stock is around 160, right? Let us say what you can do, right? You right, based on your analysis, you are thinking that this stock will not go above 170, or you bought it 160 or 150, you thought it will go up to 200, but it is not moving like that. Instead of just holding the stock, what you can do, you can sell the calls. That means you are telling that I am okay to sell the stock at you bought at 160, you are selling this, right? You go here and sell the call. So you are collecting a premium of approximately $50 for every contract. So if stock goes to 170 or more, right, above 170 plus, because you got the stocks at 160, you are still in the profit. If stock is not going to 170, it is still at sitting somewhere around 165, 167.5. It is like your rent. You are collecting a residual income from your stock. Every month you are doing it, you collect something. If stock is not moving above that, if it is moving above that, you bought at 160, it went to 170, still you are making some profits. Right? So instead of basically keeping all our stocks in our account and just waiting for them to move up, if you have market conditions like this, where it is choppy, sidelines, not moving very well, you can keep selling the calls, be like a seller, so that, and right, if you bought at 160 or 150, you sell something around 165, 170. So still you are in the profit. When stock goes to 170, if it goes so much, then you might be losing some profit potential. But if it is not moving above 170, if it comes to 165 by 2nd September, this you already collected this premium. So all that money is yours. That $50 you collected. That is like your weekly rent. Again, you repeat the same thing next week. You keep on repeating it. So you are collecting rent on your stocks instead of just waiting for them to go, which may take few weeks, few months, you never know. You keep selling calls at a higher strike price. So you are collecting money. If stock goes above that, still you are in a profit, because you are collecting the premiums. Your investment is getting reduced. Whenever you are collecting premium, that means your investment, you bought at 160, now you got some $50. So your investment got reduced by maybe, right, let us say 50. If you bought some 100 stocks, that means 16,000. Now you got some $100 or $200 from the premium. Now your 16,000 investment became 15,800, or you are collecting residual income, right? One way is you can do dividends, but dividends you have to wait for every 3 months, where you get some minimal amount from the stocks. Rather than dividends, covered calls is a better strategy, where you can buy stock and you keep selling covered calls at a higher strike price. So you can keep collecting, you can make residual income from the covered call strategy. If stock goes down, anyway, you want to hold that stock, right? It is a good stock like Apple or maybe IBM or Verizon or right AT&T or some dividend stocks. Instead of just holding them, you can keep selling covered calls and make some residual, right? Just like buying a house and taking rents every month, you can do the same thing using covered call strategy. Only risk is if stock goes so down, right? You sold a covered call and stock is going down. Because you sold a covered call, you should hold stocks in your account. That is where risk comes. But again, right, everything comes with a risk and reward. So we have to decide, right? Some stocks, they don't move much. They don't move too high or too down. They, right, for example, you have AT&T stock. It won't move too much. It will be like at nearly $1 or $2 here and there. So such type of stocks, right? Don't do covered calls on Tesla or high momentum stocks, but stocks which don't move much, they are like generally stay there. So right, without much movement, 1% up and 1% down, but they are not too volatile. For such type of stocks, buying them and selling covered calls is a good strategy, right? And right, as I mentioned, right, these are some of the stocks, right? Baba, Claire, NEE, Zoom, Macy's, they are looking very bullish for the coming week. And then Len, FSLR, UPST, AMC, DVN, they are looking very bearish for the coming week, right? Again, when to enter, will be alerting when, right, which is the right, because we know Baba is bullish, but we have to enter at right time, at right support levels, right? Looking at the trend of the day, right? For example, tomorrow also it continue, right? Futures are looking red. Then maybe tomorrow we should more focus on put side, right? We should go along with the trend of the day, right? Trend is our friend. When it is a bearish day, don't try to, right? Maybe it may not be a good idea to buy calls. We may start buying some puts on these ones when they reach to a proper levels, right? So, and then we have nearly 50 plus earnings in the next week, right? We are looking at various things, right? We are looking at option flows. We are looking at the technical indicators. We are looking at the open interest for next coming weeks. Based on all those things, right? I can see, right, this, and there are some stocks, right? For example, CRWD is looking bullish, but it is like there are already high expectations on crowd or on PDD or Baidu. They already moved a lot before the earnings. So after earnings, even if they beat the revenues, they beat the EPS, they give good guidance also, they may not move huge. But if there is a stock with a lower expectation, right? If nobody, for example, Fetch, FTCH on Friday, right? We predicted that it will be bullish. From $9, it moved to nearly $13 on Monday because nobody expected that they will give a good guidance, right? It is like a movie, right? You know, if you are from Telugu, right? You know about Vijay Deverakonda, right? When he released that Pelli Choopulu, nobody expected a good movie and it became a blockbuster. Now everybody had huge expectations on Liger movie, and that movie flopped like anything. In the same way, earnings also, it is not only just beating the revenue, beating the EPS, not only giving good guidance, but if everybody is expecting so much from crowd, so much from Baidu, so much from PDD, and if they are not meeting it, the stock can still go down. So that's why there might be some small movement on crowd, PDD, CHPT, Baidu, but these are some stocks like CTLT. It is a huge bearish, right? It can go down very much. SLQT, HPQ, PSEC, and then right, BMO, right? Bullish. This HTHT is looking very good. So again, we'll be sharing the alerts in the channels, right? Whenever they come to a proper support levels, but based on the entire analysis, right? I'll be sharing this list in the channel, and then once we have the earnings also, I'll share, right? How much, right? Whatever we predicted on Friday, we got nearly 80% right. Let us also see how this week earnings predictions will go based on various factors, right? If it is strong, that means technically, fundamentally, catalyst wise, everything it is looking very bearish. That means we can short the stock at proper resistance and then we can make money. Or, right, we can buy puts, but generally before earnings, we have to remember that implied volatility will be too huge. If you buy puts or buy calls, your lot of money is getting into that implied volatility, and your premiums will be too expensive. So that's why instead of buying puts or buying calls, we can also buy the stock or short the stock. If it is bearish, we can short the stock. If it is very bullish, right, PSTG, it is looking very, very bullish. Right, there is a lot of hedge funds are buying it. There is a lot of open interest. There is a lot of technical indicators are looking strong. So we can buy this type of stock at a proper support level and we can make money. So like that, when we combine fundamentals, technicals, option flows, the chances of success are very, very high. So, right, this is another thing which I wanted to discuss. And the next one, I want to share about the 5K challenge. So how this 5K challenge will go is, right, last time we did with the analyst AA, this time it will be MJ who will be taking the trades. right? If you have an account with 5K, if you have a cash account, you can take any number of day trades. If it is a margin account, you have a limited, right? You cannot do more day trades, but these will be generally day trades or short swings where we start with 2, right? The minimum account what we need is $5,000. If you have an account with $5,000 cash account, or if it is a margin account, it should be 25K or more, so that you can take multiple day trades per day. Then analyst will say that, okay, I'm buying 2 contracts, 3 contracts, or generally the position size is $250. That means out of $5,000, if you are taking 250, that means you can take up to 20 trades. So once we start making some profits, right? The objective is within 4 to 6 weeks, we want to make 5K to 10K that account. So they will, analyst will, right, mention, right, which stock he's buying, which call he's buying, and how many contracts he's buying, approximately worth of $250 to start with. Then you buy the same size, and whenever they say they are closing, you can also do the same thing and you can close it, right? Last time we achieved it in 4 weeks. This time also we want to, right, make it in 4 weeks from 5K to 10K. If you are, right, if you are an active trader, you can participate, right? If you are part of this, we have multiple channels. So if you are part of MG, right, RC Options MG, right, he will be posting all the trades in this MG channel, where you can take those 5K challenge, and every, right, we'll be posting on a weekly basis, like how that 5K account is going on, how much we made profits. So, right, again, if you are interested and if you can take the trades on time and close the trades, right, on time means 30 seconds to 1 minute once you post it. Right. So yeah, that's what I want to mention, right? You what you need is 5K account, and you, if it is a cash account, if it is a margin account, it should be minimum 25K. And then within 4 weeks, the objective is to make it double. And the trades will be generally conservative because we want to, right, low risk trades. And we want to make it to 10K by end of September. Yeah, I think that's what I wanted to share today, right? We discussed about calls, puts, then debit spreads, credit spreads, covered calls. What are the advantages, disadvantages with each one? We also looked at different earnings, right? What are earnings which are happening, which are looking very much bearish, which are looking very much bullish, and some of the stocks which are not related to earnings, but which are looking good on the bullish side and which are looking good on the bearish side. So again, I'll be, right, we'll be sharing the results of all these things in our US equities in other channels. And whenever they come to proper support and resistance levels, we'll be sharing the alerts in the alert channel. We'll be posting some free alerts in the US equities also. So again, right, please remember all the concepts we discussed. So based on your risk tolerance, which one you belong to, take that one, right? You can ask, like, why don't you post all credit spreads? If they are so low risk, why not enlist post everything credit spreads, right? Because we have 700-800 subscribers, and each one might have a different mentality, different risk profile, and everybody want to make more money, right? Trading means if we give 10%, 15%, they may not like it. And you see 100, 200%, that's where. So that's why we have, for example, HK, right? If you see analyst HK channel, right? He started only giving debit spreads and credit spreads, right? VLO, COP, ENPH, CO, right? You buy 120 call, sell 135 call, right? He gave it on 822, and it is approximately 80% profit. COP, we are at 205% profit. So you before taking the trade, you know what is the max profit you can make, what is the max loss you can make. You have a defined risk with the spreads. So if you are, right, a moderate risk or a low risk tolerance guy, follow analysts like HK. or you have a high risk tolerance, right? For example, right, KC, you may make huge profits or you may make huge losses, right? Because his type of trading is scalping, day trading, quick ins and quick outs. So it depends on you have to decide, do I belong to this type of risk or do I belong to a low risk type? So based on that, you decide which analyst suits your nature, your trading style, your portfolio size, so that you can take better decisions and you can be on the green side. Because if you take, for example, some trades like this, 2 or 3 trades, if you have a small account, it might become zero, right? So that's why if you have a high risk tolerance, you have a bigger account, scalping, day trading, taking quick trades might be good for you. If you have a low risk tolerance, you are okay with small profits. You don't want a huge 200%, 300%, but you want 10%, 15% on majority of the trades. Enlist like HK or VC, they might be good for you, where you make more profits but smaller profits. Here you might be making bigger profits, but you may also have more losses, right? Or more losses, or some losses where some may go completely, right? Because these are naked calls or naked puts. So understanding it is very important, so that based on your nature, based on your trading style, based on your portfolio size, based on your mentality, all those things, take a decision and go with that. So you will be on a greener side, right? So I hope, right, all these sessions gave you insights into what are option Greeks, why it is important to understand what is delta, what is gamma, what is theta, what is vega, how they will help us in decision making. If I have a big account, if I have, should I buy in the money call, should I buy out of the money call? If it is too much volatile stock, should I buy the call or should I sell the call? Right, all these concepts will help you, so that you are not just following with FOMO, you are also making some decisions, so that you will be in a, right? Again, you might be asking, okay, we don't have that much time to make all those decisions. Just I want to follow Enlist, right? As I mentioned, Enlist is giving a trade to 600-700 traders. Each one may have a different risk profile. So it's not only in the, right, in our, I'm not just talking about our alert channel. In most of the alert channel, that's what happens, where members will just take the trades without understanding the concept, why they are taking it. But by understanding all these things, now you know, okay, I am a low risk tolerance guy. Let me go with trade spreads, right? Convert whatever, if he gives a call or put, you can convert it into a credit spread. If he gives a call, you can convert it into a debit spread, right? If he's giving a 100 call, you buy 100 call, sell 102 call. If he's giving a 100 put, buy or sell 102 put, or sell 98 put, buy 100 call, the 100 put, something like that, right? Now you understood the concepts, you can change those based on your trading style, and you can be on the greener side, or you can be on the profit side. You can take low risk, and uh, you can be on a better situation. So that's what, right? It is very important to have understand all these concepts, to have this knowledge, so we take less risk, and we can be on a profitable side, right? With that, I hope it helped some of you to understand, to connect the dots, right? We started from calls, then we just looked at puts, we looked at debit spreads, we looked at credit spreads, we looked at covered calls, we looked at various things. Now you can connect the dots, right? This is entire cycle, right? We started from the buyer side, we ended on the seller side. What are the advantages to be on the seller side? Why hedge funds, they make a lot of money? Because they are on the seller side, they are selling, they are utilizing time decay, implied volatility, interest rate changes, everything. They are on the right, on the profit making side. Whereas all the retail traders, we are just buying out of the money calls where the probability is very, very less. We are taking more and more risk and we are losing money. So that's why you be on the seller side by doing credit spreads, or even if you do debit spreads, you are still on the buyer side, but you are buyer plus seller, buyer first and seller. If you are doing credit spread, you are seller first and then buyer next. So, right, try to think about it and then take better decisions and be on the greener side. We want everyone to grow. We want everyone to be on the profitable side, and having knowledge is most important to make money in trading, right? With it, thanks everyone, and have a great week. Let's talk again next week. And there are a lot of things, right? For example, there are some scanners, right? Within Thinkorswim, we can create a lot of scanners. You can do, right, option scanners. You can do high volatility, implied volatility scanners. I'll explain you some of those things, right? In Finviz, we can do a lot of scanners. So each week I will be right helping you with technical analysis. I'll be helping you with how to create scanners, how to look at stocks which are moving, all those things, so that slowly you can improve, right? You can build your knowledge base so that you can take less risk and you can make more profits. Okay. With that, thanks everyone. Good night, and talk to you next week.